Howdy MJ friends. So we had a profit taking day out there. I want to talk a little bit first about correlations. If you've been watching, you certainly know I talk about correlations a good bit. And I've been talking about SPY and how we've been in a bullish vacuum on the weekly time frame for 10 weeks, how that's been the ideal scenario for the bulls to trade in this environment and to see further upside. And now we're seeing a shift. If you've been watching the SPY videos I do every night, the past 3 days we've seen clear shifts and clear clues one at a time that we are seeing weekly consolidation now take place. So for me, that is now a different market environment that we are currently trading in. That means I get less aggressive, I pump the brakes, I trade with smaller positions, I trade less often because I go aggressive when the signals are there for the bulls and it's nice and easy, and I go conservative when it's less clear and less choppy. And that prevents me from giving back capital and keeps me going 3 steps forward and 1 step back. So I'm going to talk about correlations first. Today, this morning, I sold my swing positions in ACB and Cron in the first 10 minutes of trading. And the reason that I was able to recognize that that was a smart decision was a number of things. First, it's the premise. Number one, I don't want to get back my gains from yesterday. So I already know that I'm selling this morning to lock in those gains from yesterday. Number two, I know the S&P 500 is showing some signs of weakness. It gave us a daily inside bar yesterday, and when we opened this morning, we were right down near that support. So we had to be cautious of a bear break of the daily inside bar on SPY, which broke within the first 15 minutes of trading. So those two things in combination means that right when the bell rings in the morning, I have my sell orders filled out, and I literally have to push one button to be back to cash. So the first thing that we did, and this was, I was live, and let's actually just show that for the non-believers out there, just because I don't want to be the guy that says I did this and this and this. But here are my exits on ACB, Cron, and I'm blocking my account number here, but 937, 938, 939, 940 is me scaling out of these positions. And I was live and I was saying, okay, first things first, we started fine. Nice start to the day for the bulls. We got to push up. And then the second 5-minute candlestick, I said, whoa, that's a red flag. And I was specifically looking at ACB when I said that. And the reason was you had a big bull move and a strong start to the day, and you gave back the vast majority of that move on the first 5-minute candlestick. So I started locking in my profit on this candlestick, and again, just took 40% off of my positions first thing and said, all right, let's see if we hit a new low of the day. And then I saw enough that said, all right, SPY's breaking lower. We're seeing enough of a pullback first thing after a strong push right at the open that I'm just locking it all in, and I'm not going to risk the gains from yesterday. So the correlation to SPY was key. Let's just look at the correlation to SPY. This is SPY in the background, these unfilled candles. And then here's CGC. You cannot get any more correlated than that on the 5-minute time frame. And it's a scenario where CGC broke key resistance on the daily time frame. And it's the kind of thing where it's almost like mastering correlations puts you in from, a good trader to an advanced or great trader, in my opinion. Because you look at this and say, wait a minute, CGC broke its key resistance of 48.40 and then dumped. How can I avoid that? That's a clear fake out. And that's what has a lot of traders fearful from making trades, is being faked out. And it was SPY giving the clear signal, red flag. And that red flag was given in the first 10 to 15 minutes of trading. And yes, it's difficult to recognize that, but when you build up the experience and the skill of watching everything trade together and watching the flow and getting comfortable with it all, then it becomes a lot more easier. So, someone who doesn't know anything about correlations and doesn't know about the S&P 500 impact here would look at this chart and say, technical analysis is bunk. That's a bull break and it didn't do anything. I'm not going to learn this. When in reality, if you look at the 5-minute time frame, SPY is very clearly the reason that we broke resistance and then completely gave it back as the bears controlled the day. So this is CGC. Let's run through the major names. ACB compared to SPY. Look at the 5-minute time frame. Pretty much imprinted each other. Overlapped, can hardly even see it. APHA, same exact thing. Cron, same exact thing. Everybody is doing what SPY is doing. What causes breaks in correlations? Yesterday, SPY wasn't strong, and Cron and ACB ran huge. Volume breaks correlations. If you have a sector that's pulling back and an individual company puts out significant news, volume, dollar volume goes to that company and it breaks correlations. So yesterday, we had CGC and APHA to a decent degree correlated to SPY in the sense that we didn't really get much upside. The bulls didn't do a whole lot. The volume influx occurred in Cron and ACB due to the initiation of coverage and the price targets that were higher on those names. And you could see the volume. That's why I'm always looking comparatively at volume. I want to know What was the volume in the first hour of trading yesterday? What was the volume on the day? What's the volume in the first 20 minutes of trading today? And ACB and Cron, I traded them both yesterday, having nothing to do with the upgrade. I don't care about an upgrade or, coverage at all. But when you have huge volume coming with it, then I say, okay, that's meaningful. Now it means something to me. So we could see ACB's volume in the first 20 minutes of trading yesterday was already way past half of the previous days. So we can say we know we're going to see more volume today. And which in that scenario, when the dollar volume is coming in, that you can disregard correlations to a large degree because that volume being brought in by retail and by whoever else is breaking correlations to the market. So that's the correlations lesson for this morning. And we're going to continue watching SPY because, in my opinion, the size of the pullback on the weekly time frame for SPY is going to dictate the size of the pullbacks on these MJ names. And you'll see over this weekend when I do the US MJ video and the Canadian MJ video, the US MJ names have had significant consolidation in the last 6 days. Not all of them, but most of them. That is showing us very clear signs that money is leaving the sector in the USMJ sector, and it's being protective. It's profits being locked in. You can see, if you're comfortable in watching every single day, you can feel the change in momentum a little bit this past week, and it's very notable. So again, I go conservative, and you can either be looking to play bearish in this scenario and change, or you can just play less bullish and be more cash and be more protective. So going into the individual analysis now for these names, we'll start it off with CGC. So again, bull break, no follow through thanks to SPY. On the hourly time frame, we dumped, hourly oversold. Actually, we didn't get to oversold yet. A weak bounce attempt set a resistance at 46.50. So that's a resistance level to be watching tomorrow, and support's going to be the low of the day. If we break the low of the day, the daily uptrend is at risk. The last little daily higher low was 45.65. If we break 45.65, we lose the daily uptrend, which means I zoom out to the weekly time frame for clarity. And I would say that we have our high of the bull move, our low of the pullback, and this would be a lower high if we lose the daily uptrend and pull back, and we'll have a tightening range. Now, if SPY is going to give us a weekly bull flag, which is still possible, then we're probably going to hold 41.68 support on CGC. If SPY is going to pull back more significantly than a bull flag and enter an equilibrium on the weekly time frame, we could potentially see SPY and Canadian MJ names drop down another leg, and we could see SPY in the upper, or could see CGC in the upper 30s into the spring and summer. That's a possibility. Again, I don't know how significant the SPY consolidation is going to be. I'm going to get details about this consolidation every single day, and my view and picture is going to change every single day. But until we see how significant that consolidation is on SPY, can't possibly give any kind of prediction as to what the consolidation is going to look like across the Canadian and US MJ sector. We also have uncertainty about the FDA commissioner stepping down. So that's caused a huge sell-off in the biotech sector. It's uncertainty with CBD. It's just something that the bears are going to point to in terms of, if people start going short and those bearish articles start coming out and we start to see some fear attempt to take hold, you better believe that that's a narrative that they're going to be spinning. Cron had some nice follow through first thing. Again, able to lock in some very small amounts of profit. And then we pulled back significantly. So in the hourly time frame for Cron, we did get a little bounce from the low on 22. I actually had a buy order. I was going to enter right on a 22 psychological break. Didn't get it, but I was being extra picky because, again, I was protecting my profit from the previous day. And those trades better come to me. Otherwise, I'm not going to take them. So missed that entry at 22, but left it alone at that. Said, all right, didn't meet my criteria that I wanted. And I moved on from there. So we have our low, high of the bounce, little higher low and higher high at the end of the day. So there was a little bit of a shift in momentum. 22.01 is our key support. 23, so pretty much 22 support, 23 resistance, the psychological levels. If we break 23, we're looking up at 24.37. And if we break, let's see, it's 22.32 and 22 as key supports. And if we break 22, the daily higher low that's our must hold is 20.67. So still going to be watching these names because, again, if SPY gives us that weekly bull flag, Cron's going to go to blue sky breakout. And that's why it's such a clear different scenario. SPY bull flag into April and continuation tells me Cron is likely going to hit blue sky breakout into April. Whereas if SPY pulls back significantly, we're probably going to see Cron head back down towards these $19 supports. So it's a completely different story depending on what the overall market environment is doing. ACB on the daily time frame, strong start. We pushed up a solid 4% from the close right away. And again, we broke 834 resistance, but got no follow through because of SPY weakness. So on the hourly time frame, we have resistance of 797, support is 776, and we just traded sideways most of the day after the initial dump. And on the daily time frame, anything over 701 is a higher low. So the bulls have space to work with in order to maintain the daily uptrend at this point. So even if we do see further pullback from here, we will still watch for a daily higher low to form. APHA, another little fake out. The Canadian ticker did not get a bull break on the hourly equilibrium. The US ticker got a bull break by 1 penny. But here's another clear signal, again, for people that are scared of getting faked out and don't want to enter trades for it to just turn around. If you break resistance by 1 penny, and on that same 1 minute candlestick, every candlestick here is 1 minute. If on the same 1 minute candlestick, you drop 12 pennies after a resistance break, that's your instant red flag. You have a red flag literally in the first minute of your trade. From there, you can watch the 2 minute equilibrium that developed, and the 2 minute equilibrium breaking could be your signal to exit that trade. So we had the low of the day, broke resistance by 1 penny, instantly pulled back. You say, uh-oh, that's my red flag. I'm going to exit on this 2 minute little bounce attempt. Lower high, lower low, lower high, new low of the day. So recognizing red flags is important. So for APHA on the daily chart, potential to lose the uptrend here. And actually we did lose a little daily higher low at 10.03. So that shift in momentum, we might have to pull back on the weekly. Same thing as CGC. We have our weekly resistance, our support, and it looks like we may be forming a lower high here, and we might have to pull back and try and form a higher low, perhaps in the low $9 range. Next supports on the daily, the most important level is 961. Clear resistance up at 1050. Look at all these rejections. 1, 2, 3, 4, 5, 6, 7 rejections in the last 10 days from this mid 10 range on the US ticker. TLRY, bear, close at the low of the day. We're approaching that weekly support. If 75.25 breaks, we're looking down at 70 psychological and a weekly equilibrium bear break. Bears have firm control of TLRY, and we may test that support tomorrow. OGI, trying for a daily bull flag. Some consolidation today. Couldn't hit that new all-time high first thing. Rejected by 5 pennies, and that led to profit taking. So still bouncing around. 894 is support, followed by 856. As long as the bulls can keep this consolidation nice and healthy, it is a potential bull flag. So, and we also have a ton of space to work with. Anything above 771 is a daily higher low. So we know we're not going to lose this daily uptrend on this consolidation. It's very unlikely to do so. And there is still the potential that it is a bull flag. So OGI is very healthy. VFF is still very healthy. We'll look at it in just a second. TRST still very healthy here as well. Multiple daily inside bars, so we know the range is tightening up, but it's a weekly potential bull flag. So TRST is holding up well. Bulls would love to see a break of 12.15 tomorrow and try and make their way up to 12.61 resistance. HEXO. So again, I don't really like the clarity of HEXO. Anything under 758 is a daily lower high. Trading sideways as well, multiple inside bars just like TRST. 713 is support. Still maintaining the weekly uptrend, so that's what I'd be watching because the daily chart's not clear. The weekly chart is still clear. So looking for the weekly higher low to form compared to 658. So VFF, bulls filled the gap at 1407 and instantly turned around. So VFF formed a daily higher low, and it's a bull flag on the daily chart at this point. We need to change the hourly trend. It's a great bounce on the hourly, 1536 resistance, but we need an hourly higher low and higher high to confirm that trend change. So bulls aren't very confident just yet, or they're pretty confident because that's a convincing bounce right off that gap fill. But we need that hourly higher low and higher high to have us looking back at the all-time high. T-God, nice start to the day, but again, profit taking with the sector. Hourly support, holding on at this point, 441 and 436. And the bulls have resistance of 455 and 462. So T-God's still looking just fine for the bulls as well. We know that the next time we consolidate here, a daily higher low will form because the last one was 364. So even though there is weakness in the S&P 500, for the vast majority of the MJ sector names, the correlation is still bullish. It doesn't mean you can escape the correlation. It's going to drag you down a little bit, but it's not as significant a pullback as many other names. So the most bullish names that we still see are VFF, TRST, OGI, Cron still holding on just fine, still within proximity of that all-time high. So again, I'm not giving up on the sector by any means. It's just my antenna is raised, and I got that spidey sense of, consolidation, slowing down, and I will be watching these names, the strongest names that are still holding up. If SPY turns right around and we say, oh, that was a SPY bull flag, and the bulls are back just like that, then I'm going to be looking to all these names that stand out as the strongest to perform really well once the SPY bulls take back over, and this brief little starting sense of uneasiness from the bulls gets alleviated. That's a possibility as well that I'm still going to keep on the table. IIPR, we're watching for a daily high or low. So I'm highlighting it here because there's a gap to fill at 68.62. Just like VFF had gaps to fill. If we fill that gap, the hourly RSI will be oversold. It was oversold right here at the end of the day. And I will be looking to begin to scale into an entry because the most likely scenario, if we're just visually looking at a low, high, and we're looking for a higher low, and if we start scaling in the upper 60s, that's when I'm comfortable that we can look for a bounce and then a lower high to form, perhaps in the mid to upper 70s. So we're going to look for a daily equilibrium to form, and we're going to look for either an hourly trend change if you want to be have less risk and have less reward and be a little bit more cautious, or hourly oversold conditions into the potential gap fill. But I am keeping an eye on IIPR, especially if it heads down weak tomorrow to fill that gap. I will look to begin scaling in. CXXI also holding on pretty well, hourly uptrend. Still intact, I suppose. Key level for me is 187 and 189 and 191. Every couple pennies there's a higher low. 206 is our double top, so that's obviously the most important resistance level. So pretty much from here, if we break 189, a daily higher low has to form, and otherwise it's just 206. And after 206, we're looking up at 214 and 229. So bulls still holding on here as well, pretty well. So my interest is going to be on Cron, OGI, TRST, and VFF, and IIPR for that play over the next couple weeks. And we're going to continue watching the S&P 500. We're going to continue watching the correlations to the S&P 500. We're going to continue watching any potential news, or keep an eye out for those articles, because when we see these bear articles start to come out, it's almost like the bears showing us their hands. It's the bears saying, yep, we're short, and now we're going to try and get you guys to sell. So it's going to be an interesting next couple of months as we head into the potential summer lull that we've had seasonality in the MJ sector in the past. And again, can't hurt to remain cautious and protect profits. And we'll kick it one day at a time as always. Hope you have a good rest of your day. Do good things. Let's get to chapter 4 of the adventure. So where we left off, I went through Mammoth Cave in Kentucky, then went through land between the lakes, and then went over to Mark Twain National Forest in Missouri. This is chapter 4. So making our way westward, taking out a pretty good chunk of the country so far at this point. So here we go, Irish Wilderness, Mark Twain National Forest. My hat was pretty fitting. It was actually my grandfather's hat. He got it in Ireland when my parents got married, and I wore it until it fell apart. That was my favorite hat, and I've never found one like it. So in this spot, there were some really cool rivers and just lush green. It was nice and hot. It was June at this point, so some really good spots to just swim. And there were some caves that were really cool where you could just feel really cold spring water coming out of them. A little bit eerie, but a great spot to camp. Nice and flat and shade and not too many ticks crawling all over you. So I had to take a picture of this guy, and I forget his name, but had an interesting encounter with him. I was just there all by myself. Again, in the middle of these national forests, in the middle of the week, there is nobody around. So I'm there by myself, just, reestablishing my game plan or picking where I'm going to go. And this guy comes bombing down the hill with this bike with these huge tires, and his toddler sitting on the handlebars. He must have been going 30 miles an hour, insanely fast, and he whips up and comes over to me, and he's this Russian guy, and I can't even possibly do his accent. But if you've seen the movies, whether it's Catch-22 or all those movies with the Russian mobsters, this was him. And he told me about how he could steal my car in 55 seconds with a screwdriver, and all of his other breaking the law stories and adventures. So I didn't really ever, this entire road trip, which lasted 7 months, I never really had any fear, but I was always, on alert. If I'm by myself, I don't want to tell people exactly where I'm camping when they know I'm by myself. And I always got pepper spray and a knife within an arm's reach just in case. But other than that, I was a little uneasy with this guy, just the way he approached me. But other than that, there was never any fear of animals or being attacked in the middle of the night or anything like that. But had an interesting conversation with him. He ended up, saying he had the greatest weed, and he pulls out this really terrible weed and takes out a can and he crushes it and pokes the holes in it and he wants me to smoke it. So it was just a fun, memorable experience. And that was the first human interaction that I had in 2 weeks. And it gets to the point where, the only interaction that I have is going through grocery stores and the woman at the checkout counter. So it was nice to have an actual conversation. He invited me back to his place, but I politely declined because I didn't want to get jumped. Capture that moment, 111 miles on my Honda Civic. Trusty steed. So here's just more of those rivers and caves and, again, just nobody around. You can swim all you want, float down the river, get back to your camp spot, make a fire, go to bed, read a book, think about life, and think about what you're going to do tomorrow at the next new spot that you have no idea what it looks like. This was a spot that I found, and I'll go through and give some resources because there's some great websites out there. Swimmingholes.org is where I got this one. You also have hot springs websites that are very similar. Freecampsites.net. These are all resources where you can find free camping sites all around the country, and people describe it and they say, when they were last there. This was one I found on swimmingholes.org, and it's the local places that you would never know about. This is a place where all the locals go and swim and hang out, and it's not advertised anywhere. There's no signs, no anything. So I pulled in here and ended up camping. This was actually my birthday night, my 25th birthday, and there was an awesome waterfall and a swimming hole down at the bottom. There's a video somewhere of me dancing to James Brown at sunrise by myself, but just pumped to be alive. When you wake up to this spot by yourself, it's just hard not to be happy. So, thought this was cool. We had a giant tree break in half and knock down a medium tree that broke in half and knock down a small tree and broke in half. And that's how I knew Bigfoot existed. That's a pretty cool thing. So that's all I got for Missouri. Not a whole lot going on, just making my way to Colorado. Really, Colorado and Utah was the highlight of this road trip. And in the previous road trips, I went up to the redwoods and things like that, but stayed in the middle of the country this time around. So we'll head through Kansas. Kansas is sure exciting. If you've road tripped through Kansas, so much to see, so many things to do. I'm just kidding. It's flat and boring, and really you just count the hours until you're through Kansas. So that's that. We'll see you tomorrow, and hope you're doing well.